Hi you guys, welcome back to the channel. My name is Brad. This is the Firefighter's Financial Toolbox. I've had a lot of people asking me this in the last few months about REITs and do I invest in them. The answer is yes, and I think REITs are a good way for people to get real estate in their portfolio, and an easy way to do that is by having a REIT ETF. Now, I've made a few videos in the past on different REIT ETFs, but I've never done one specifically on Schwab's REIT ETF. So today we're going to talk about the Schwab US REIT ETF. That's ticker symbol SCHH. First of all, this fund's been around since 2011, so it's got a little bit of a track record. It's got a very nice low expense ratio of 0.07%, and it's got about $5.5 billion in assets under management, you guys. So this is a big fund. This will be comparable to your VNQs from Vanguard, your IYR from iShares. This is a REIT ETF that only invests in actual real estate properties. So first of all, the neat thing to look at is this has a quarterly distribution yield, and it's a little bit on the lower side at 2.31%. This fund has a total of 139 holdings currently, and it tracks the Dow Jones Equity All REIT Capped Index. Now, let's take a look at the year to date. And the chart shows us that year to date, we're up about 11.82%. The 1 year, you guys, is 36.36%. Now, I preface that with the fact that, remember, real estate took it on the chin during the COVID thing, and it still hasn't completely recovered, although it is coming back, and it's showing so in the 1 year. 3 years, this fund's about a little over 5%. At the 5 year, it's only 3.15%. Now, this is another thing that I want to talk about. You can see that by the chart that the price has been going up. But if we look at the 5 year chart, you guys, we can see that it's trading right now at about $43. And if we go back 5 years to the end of 2016, we see that it was actually trading at about $46 back then. So because of the fall, even though it has recovered, the prices are still somewhat competitive as far as a buy. Now, does that mean we should buy it now? I would never tell you that, but I'm just giving you options and giving you information so that you can make a decision. If we take a look at the sectors that it holds, we see that specialized REITs makes up about 42.5%. Commercial real estate REITs, about 41%. Residential makes up just under 14%. Diversified makes up a little less than 1%. And then there's some other real estate developing stuff in there that makes up a very small portion. You guys, this is a good fund in that it marks the boxes that I like. You know, I like well-diversified, low cost, easy to invest funds. This takes care of all three. You've got a low expense ratio, as I said, of 0.07%. So you're paying $7 on every $10,000 you have invested per year. Very, very inexpensive, you guys, compared to some of the other REIT ETFs out there. It's got 139 holdings currently, so it's got a good diversity of different REITs in its portfolio. Now, let's take a look at the top 10 holdings. We see that the first holding at 8.5% is American Tower. Prologis makes up about 6.5%. Crown Castle International, think 5G towers. They make up about 6%. Equinix, a little over 4.5%. Digital Realty Trust. Remember, Digital Realty invests in the big buildings that have servers for the internet. A little over just about 3.25%. Public Storage, a little over 3%, you guys. We Americans collect a lot of stuff, a lot of crap. And when we run out of room in our house, we rent storage spaces to put it there. Public Storage being a big company, another solid investment, right? Simon Properties makes up about 3%. SBA Communications is a little under 2.5%. Welltower Incorporated is about 2.3%. And Weyerhaeuser rounds out the top 10. Now, those 10 companies do make up 42% of this. Remember, this is a market cap based index. So the bigger the company, the bigger the share that they end up holding in the market. But the nice thing about index investing, as I always tell you guys, is they're low cost, and so you get what the index does. Whatever the stock market does, you pretty much are going to capture that. And this is a good way to get your REITs without having to individually look into companies and do all the homework that's involved in doing single REITs. You guys, I hope you got something out of this. If you did, do me a favor. Give me that thumbs up. It really helps the algorithm. Gets the video out to more people. If you're not subscribed, you know the deal. Hit the red button, ring the bell. You'll get notified every time I make a video. All right, we'll see you. Thanks.